The average reserve currency throughout the history of at least the last 500 years has been about 100 years. Well, the U.S. had their reserve currency initiated in 1920, right? So that's when the U.S. dollar became the reserve currency. We're now at 101 years of the U.S. dollar being the reserve currency. Before that, it was the UK currency, which was, I think it was 105 years. And prior to that, it was France had the reserve currency, which was 95 years. So we've seen as the stock market has gone up, we've seen leverage in the crypto market go up. This is the chart of Bitcoin. I have a couple little trend lines here I'll show just for interesting sake here. Now, what's kind of scaring me here a little bit is that you have another head and shoulders potentially forming here, except this one's even bigger, right? So look at this.
Yep.
And then now again, we haven't really completed this right shoulder, but if we let, I'm short-term thinking that maybe crypto inches up a little bit or goes sideways for another few weeks. And if that happens, you're going to create a right shoulder, which then if you start to break down, you have another neckline right here. This would be your break point right there.
And that would take us to 20,000, right?
And what's crazy, right? Yeah, this is what's crazy is you can, if you take the highest point of the head and shoulders and drop a plumb line to that line, that distance gives you the exact target to this low here, right? So you can actually calculate the estimated target. The scary thing about it is if you do that with this head and shoulders, you literally get below 20,000 as an ultimate target. I think around 15 to 17,000 down here.
It's your boy Crypto Blood, and welcome to another Kicking It session today. I haven't done the Kicking It session in so long, ladies and gentlemen, so I'm getting back into the groove of things. Gareth Soloway, I hope I'm pronouncing it correctly. I'm calling him the new turbo trader. We were talking prior to going live. He's been in the game since I think 2004, I believe. He knows what he's doing, ladies and gentlemen. I mean, the guy's got over 52,000 followers on Twitter. I don't think he has a YouTube channel. But I wanted to have him on because we just had some updates from the FOMC, or the Federal Reserve. We'll talk about that a little bit. We'll talk about Bitcoin. He's trading Bitcoin in crypto markets. He posts his performance on his website, verified for you to see. And let me bring him in. Gareth, thank you for joining me today. I really appreciate you coming on. I love these trader talks because I'm a trader myself.
Awesome.
Not just a YouTube trader, you know, a real trader, man. I understand the markets. I'm not saying I'm the best trader, but I do fairly well for myself. Thank you, Gareth, for joining me today on another Kicking It session.
It's a pleasure to be here, and great to talk to a trader that trades. And yeah, you gave me a lot of credit in terms of knowing everything I do, but it's clear to point out that doesn't mean I don't lose on trades. Every trader loses occasionally. It's all about that overall average.
Hey, stay away from the traders that tell you they don't lose. Right? Yep. Losing is, you know what? I don't know where I got this from. I didn't make it up. I stole it from somewhere, but it was like losing is paying rent or is part of your expenses, your business expenses, right? That's what it is. You're going to lose in trading. It's just about managing your risk, right? And managing your losses, having small losses and capitalizing on the gains. So tell us a little bit about yourself, though. I didn't give you a formal introduction. That's just not how we do over here. I usually let the person talk for themselves.
Yeah, so basically I got interested in the market in high school. You know, I'd never even known what investing was. And there was like this investment club. I said, oh, that sounds interesting. And, you know, it happened to be in the late 90s when the dot-coms were going nuts, much like altcoins and Bitcoin and all these other things. And it was addicting. I had a fake 100,000 account, which I'm sure some of you guys did the same type of thing when you were in school. And, you know, before I knew it, I had doubled the money and then, you know, almost tripled it in a month span just by kind of going all in on these like small cap penny stocks in the dot-com era. And it addicted me. I said, wow, you know, even though this is fake money, this has to be, I have to figure this out. I have to follow this up. If I can do this in real life, that's amazing. Needless to say, I learned that you never bet all the farm on any one or two trades. But that was my beginning, and I kind of followed through with it. I was dedicated. After school, I ended up, you know, working at a job for a year, didn't like it, went and started to trade my own money, and I just really trial and errored it. You know, I mean, there's multiple ways you can learn how to trade. One is, well, it's two ways. One is you lose to the market and you learn, right? We just talked about that before. And then the other way is you find like a mentor or someone to follow. Back then I didn't have anyone. So I paid my dues the more expensive way, which is paying the market to learn my lessons. Eventually I turned the corner and began to make money. And then, once you start making money as a trader, you'll have some setbacks, but your learning curve is just constantly kind of grinding up. And that's the beauty of it. You only get better over time because you have more experience.
Yes, I totally agree with you. And, it is a learning curve. And people come into the trading game wanting to know it all within the span of 6 months, a year. Even 2 years is not enough time in it. I mean, how long you've been trading for? What, 20 years?
Yeah, over a little over 20 years. I mean, in the beginning, it was very small. It was just kind of dipping the toe in the water. But yeah, I mean, it's been 20 plus years since I bought my first stocks. And again, honestly, the first 10 years was a struggle, really. I mean, well, not 10, maybe the first 5, and then slowly you get more accustomed to it. And I was so dedicated. I mean, like, you talk about needing dedication to be a trader, and it's true, because you're going to have setbacks. You're going to lose a lot of your money. And I did. And what I did was I literally worked 3 different jobs while I was trying to learn how to trade, because I would have to replenish my trading account on a monthly basis. So I saved every dollar I could. And then at the end of the month, put it in the trading account. And then I'd lose it the next month, put more in. And eventually those losses got smaller until they went into the green. And then, again, it just built on that.
Yes, compounding exponential growth from there.
Yeah.
Tell us about your website. I'm looking at it right now. verifiedinvestingcrypto.com. What is this all about? I mean, it looks like you got an educational portion of it, technical analysis. Just kind of give us a rundown on that. Go ahead and show your shit.
Yeah, right. So, I mean, basically, people had asked me for well over a year to start a crypto service where I gave crypto trades. I have inthemoneystocks.com where I do swing trades on stocks and commodities and stuff like that. But I never really did the crypto side, and people just wanted it right now. I mean, it's so popular. So I launched it, and it's basically I put out any trade I take in crypto. In terms of swing trades, I post it immediately as soon as I get filled. People can follow me with those entries. And then as soon as I exit, I post the exit. I send an alert out for buys and sells. And then I do a daily video or 2. So if there's a lot of action, I'll do 2 videos a day where I kind of talk about what's going on. We analyze the charts, all from a technical perspective. This is no FOMO. This is not kind of pump and dump. That's all BS, in my opinion. If you want to make consistent money, you go to the more liquid ones like Bitcoin, Ether, Cardano. And those are the ones I'm trading based off pure technical levels. And that's the key. So the videos have lots of education. I teach about bull flags and double bottoms and bottoming tails, topping tails, all that fun stuff, all incorporated into the service. So I just try to make it worthwhile, right? If someone's going to spend their time with me, I want them to leave feeling like not only did they make money from the trades, but they learned something as well.
Great. And just for my audience, people who follow me know that if it's a sponsored video, you'll see the sponsor ribbon in the corner of my thumbnails. This is not a sponsored video. He's not paying me to, have him come on and talk about his service or his website. This is just a kicking it session, guys, that we're having, because I see that he has a lot of expertise in trading, period. I think you're fairly new to the crypto scene, but you can apply those trading methods to any market. Once you got your system down, you have to tweak it a little bit for price volatility, right? And you can manage that with your trade sizes, because you'll have to open up those stop losses a little bit wider in regards to cryptos, because it moves so fast. But if you have a trading style, you can adopt it or adapt it to any market. Is that correct?
That's 100% correct. I mean, remember how charts are created. So I trade charts. When you see a chart and it's basically it's being created by buyers and sellers, right? You have buyers that are buying it and the chart goes up, sellers make it go down, and sellers and buyers are trading off of their human emotion, right? So every chart you look at is based off, greed and fear, essentially. And once you learn to read greed and fear in the chart, you can really translate it over to any thing, commodities, currencies, crypto, stocks, and it'll work. Now, granted, just like you said, that was a great point. Crypto is so wild, you have to buy smaller share size and then widen your stops, because we see, even something like Cardano or Polkadot, they can swing 20% in a day. So you can't keep a stop at 10%. You'll get stopped out every single day.
And 10% is wide.
Yeah.
In any other market, right?
Yeah.
Yep. So you're right. It's the wild, wild west for sure. And so, I guess my question, I'm bringing you on because I want to add value to my audience, and so they can learn as I interview these various people in different industries. What would be your philosophy or take on where we are? So I'm like a macro guy.
Mm-hmm.
I kind of look from a bird's eye view. What's your take on the Federal Reserve? Where we are? Are they in a corner? Have they painted themselves in a corner with having such low interest rates? And can they get themselves out of this? What is the likely outcome from what Fed's decisions were? Maybe what was been like 12 years ago. You know, in 08, 09. That's when the game really changed, in my opinion. That was a high water or low water mark, depending on how you want to look at it. What's your opinion, and what could you give my audience as your expertise in what the future holds for all asset classes? And then we'll narrow it down to stocks, and then narrow it even further down to cryptos.
Yeah, so I think the most important thing, so number one is, you're right, since 2009, they've printed money nonstop, right? And it's been massive amounts of money. Same thing with the government debt. If you look at how much government debt for the US was back in 09 or even in 08 or 07 versus where it is now, I mean, it's astronomical. So that has created basically a bubble in crypto, in stocks, in a lot of things.
I'm glad you said bubble in crypto.
Yeah.
Yep.
Yeah, it is. I mean, there's no doubt about it. I mean, when you see meme coins that are worth $60 billion, you know, there's something wrong there. There's not a use case long term for it, and that's an issue. Now, I think it's important for viewers to kind of understand that the Federal Reserve downfall began in 1977 with the dual mandate, right? So before 1977, they only had to worry about the monetary system, making sure inflation was in check, basically the hardcore money stuff. In 77, Congress gave them the dual mandate, which was unemployment. They had to make sure unemployment stayed low. The problem is, when you're the parent in the room and you're tasked with managing the money system, you need to be hard on the system. You can't let inflation get out of balance. The problem is, as soon as you have to worry about unemployment, now you have to be the parent that gives into the child all the time to keep unemployment low. So these two things just can't mesh together, because every time, you know, the stock market goes down, then unemployment goes up, right? Because people their 401ks go down. They don't feel like they can spend as much. It translates into less consumer demand, which then causes layoffs. And so the Fed has always had to just keep the stock market up to keep that unemployment down. Problem is, it creates inflation, which we're now dealing with unbelievably, really. I mean, that PPI number the other day was just insane. Can the Fed get out of the box they've painted themselves in? Not really. You know, the problem is that as soon as the stock market declines, they're going to need to come out with printing presses blazing again.
So you're in the camp. I think we may be in the same camp then. Yeah. I believe that the Federal Reserve is going to taper, continue, and they've increased. They said they were going to increase their tapering, right? Or winding down, for those that may not know, winding down the money printer, essentially. I'm just kind of, for laymen, in a lay way of saying it. They're going to do that, but I think the market is going to have a taper tantrum like they did in 2019, and they'll reverse course.
Yeah, that's what I think is going to happen, right? Because just think about the 120 billion that they've been printing every single month. If you remove that alone, that's 1.5 trillion out of the system in every single year. That's a huge amount. Then you take into account that the government's probably not going to be sending out checks like they did over the last year or so to Americans as readily because of inflation and the economy back. I mean, there's a lot of things. There's a lot of things that are going to be less powerful to keep the stock market up, and valuations are going to have to come in. So you're going to see deleveraging in the stock market. That likely is going to translate into crypto. I think you've already started to see it in cryptocurrency. And yeah, those debt numbers are just insane, man. I mean, absolutely insane. Gosh. But yeah, I mean, I think it's important to recognize that the Fed doesn't have many outs. In the short term, I think they will finish tapering. They might get to that first rate hike, and then you know what's going to happen? At some point, the market's going to be down 20 or 30%. The economy is going to go into a slowdown. You know, maybe we have another black swan event, and then guess what? They have to come back because unemployment's going to shoot higher. And guess what? That dual mandate says they have to keep unemployment down, so they need to print more money. And again, don't forget that the U.S. debt, they can't let interest rates go that high, or we can't even pay off our national debt.
So here's my question, though, Gareth. If they can't let interest rates go that high, but yet they have to start money printing again, then that's where we're getting really close to the end, right? In my opinion, because now we're at a point where they can't raise interest rates to, keep things from overheating, but then they can't lower interest rates or try to do the reverse either, because then that will hurt the stock market, that will hurt equities and, real estate and crypto. Well, they don't care about cryptos, but the whole psyche that they're trying to paint is of a positive economy, right? So what happens? What happens at that point, and when does that happen in your opinion?
So I think it's sooner than later, right? So a couple things I'll point to. If you look historically at reserve currencies, the average reserve currency throughout the history of at least the last 500 years has been about 100 years. Well, the U.S. had their reserve currency initiated in 1920, right? So that's when the U.S. dollar became the reserve currency. We're now at 101 years of the U.S. dollar being the reserve currency. Before that, it was the U.K. currency, which was, I think it was 105 years. And prior to that, it was France had the reserve currency, which was 95 years. So literally it's right around that level. And you could see the writing on the wall here.
Yeah, that's true.
You print enough money, we see a Venezuela type situation. Now, granted, we're the biggest in the room, right? We're the biggest country. We're the most powerful. So we're going to be able to withstand it for a certain amount of time. But at some point, it all comes crashing down. My guess is the digital yuan will probably replace as the new world's currency. I think that's what China wants. And the problem is once the U.S. dollar is not the reserve currency, countries around the world don't have to hold billions, if not trillions of dollars, and they're going to dump them on the open market. And guess what happens to our dollar, which, by the way, is great for long-term crypto, great for gold, great for basically any asset not in dollars. It's great for.
Very, very, very good point. I agree wholeheartedly with you. Now, in the short term, though, this is what I've been saying. In the short term or short run, I think cryptos will get hit hard with every other asset class if things start to unravel. Are you in that camp of cryptos are a risk on asset class?
Yes, absolutely they are. And in all fairness, they're really tied to leverage in the system, right? So we've seen as the stock market has gone up, we've seen leverage in the crypto market go up. This is the chart of Bitcoin. I have a couple little trend lines here I'll show just for interesting sake here. Let me flip to the 15-minute just for a current update on Bitcoin. You can see Bitcoin's in this wedge pattern. This is that big drop from a couple Friday nights ago, Friday into Saturday nights. And look at what it's done since. You can connect the lows right here. You can connect these highs. And basically, as a trader, you're watching to see, does it break to the downside or does it break to the upside? Breaks to the upside, you have upside maybe to 54,000 right here, and then maybe up to about 56,000. If you break to the downside, near-term target is around 42,000, which was that previous low right there. Now, let's get rid of these lines. I want to get rid of these lines because I want to talk about the daily chart. So bear with me here as we get those out. Now let's flip over to the daily chart. Now this is where things get really kind of crazy. Well, we know that we had a head and shoulders pattern over here that played out, right? And I calculated the target on this. Here was your head. Here's your right shoulder. And then here was your break trend line, your neckline as it's referred. Once that broke right there, you saw this massive sell-off to 30,000 on Bitcoin. Now, what's kind of scaring me here a little bit is that you have another head and shoulders potentially forming here, except this one's even bigger, right? So look at this. And then now, again, we haven't really completed this right shoulder, but if we I'm short-term thinking that maybe crypto inches up a little bit or goes sideways for another few weeks. And if that happens, you're going to create a right shoulder, which then if you start to break down, you have another neckline right here. This would be your break point right there.
And that would take us to 20,000, right?
And what's crazy, right? Yeah, this is what's crazy is you can, if you take the highest point of the head and shoulders and drop a plumb line to that line, that distance gives you the exact target to this low here, right? So you can actually calculate the estimated target. The scary thing about it is if you do that with this head and shoulders, you literally get below 20,000 as an ultimate target. I think around 15 to 17,000 down here. Oh, I was just going to say, listen, I mean, there's always a chance that the head and shoulders pattern doesn't fully form.
Of course.
There's always a chance it fails, but it's important for us as investors to understand the leverage in the system and then also just the situation where an unwind can, as much as you believe in Bitcoin, I'm a huge long-term believer in Bitcoin, but you can't deny the insanity in the crypto space right now and how a washout is probably very natural. I mean, you were a trader. You traded the futures. You know about washouts. You know about different cycles. It's just the cycle that needs to complete, and
Right.
then
It doesn't mean that we're non-believers of this
Right.
new asset class. That's what's so crazy. Like, people get on me all the time, Gareth, about.
Me too.
I've been saying 20,000 Bitcoin since we had that blow off top and we took out 20,000 as a previous all-time high. I said, guys, I rather listen. The market always tests previous all-time highs.
Yep.
It never fails. I said I'd rather it happen at 40,000, 60,000 versus at 100,000 and we come back to $20,000 Bitcoin, because it would be even worse pain. It'd be really bad. Yeah. But I said it has to make sure that that's a true new support level for us, and then we can head higher from there, in my opinion.
Yeah. And actually, if you could show my screen again, check this out, guys. So see this chart right here. It kind of looks like Bitcoin's chart, right? I mean, it looks, see the big run up. Then you had these multiple highs like we've seen with a higher high on Bitcoin. All right, now look at what chart this is. This is Amazon.com from 1999, 2000, before the dot-com bubble burst.
Oh, wow. Right?
And what's freaky about this is if you go forward, look at what happens. So basically you had the highs back here at over $100 on Amazon. When the dot-com bubble burst, it went all the way down to basically $5. And you know where it is today? $3,300, $3,200 a share. So my point is, for all those people, don't necessarily freak out if Bitcoin goes down. Right. The long term is very, very bullish.
Long term is very bullish. But the chart
almost is identical to Amazon back from 2000, back in the dot-com bubble. And if you look at the similarities between the dot-coms and now, it's the same thing. You had 95% of the dot-coms that went away. They went bankrupt because they were crap companies. You could say the same thing about the altcoins and all these meme coins. And then the strong survived and the strong have thrived. And back then, right, the internet was just budding. It was a brand new thing, and it was just getting started. Well, guess what? Cryptocurrency is brand new. The blockchain, all these things, NFTs, it's all the same new exciting thing. So you have to see this wash out, in my opinion, but it's ultimately going to lead to great success later on.
Yep. Oh, you're spot on, bro. Listen, guys, this guy, that's why I had him on, because he really does understand markets from a pro level. Okay. And that's what I want you guys to understand and not get all caught up in the emotions of this. I know it's very easy to in cryptos. It's great to have someone with a level head come on and speak to you, other than myself. You guys hear me and just say, man, man, get out of here. You crazy. You're always talking about going to $20,000 Bitcoin.
And I'd also like to just point out too, it doesn't mean that, if you hold some Bitcoin, doesn't mean sell it all and just, wait for 20 or 18,000. What you can do is just have a plan, right? So dollar cost average, like maybe own a couple or half a Bitcoin. And then if it drops 10,000, buy another half. And then if it, basically you can still have exposure to the asset, because listen, I could be wrong. There's always that chance.
Of course.
But there's ways to kind of do it where I would never suggest someone being all in at these levels with every last dollar they have. Have some in reserve so that you can put it to work if we do come down to those lower levels.
I agree with you, man. And I think you call it the PPT methodology. What is that? Is that the plunge protection team methodology?
I mean, what's amazing is it kind of matches up with that. And for those of you that don't know what the plunge protection team is, back, I think, in the 80s, around the 87 crash, Reagan created that to really stop big crashes from occurring. Not that it necessarily did, but it stands for price, pattern, and time. So what we've found in our analysis in the charts is that if you look at price and if you look at pattern and if you look at time, those combinations will give you the most accurate chance of calling a chart move, the next chart move correctly. Not 100%, but around 80% if you do it right.
Well, that's a high accuracy, in my opinion. Man, that's great. It's been a pleasure having you on, Gareth. Did you want to have any last words for the audience? What do you think they should do in regards to these altcoins? In my opinion, I've been in crypto since 2013. Okay. The altcoins get slaughtered, man. And I just fear that a lot of people, and I made that mistake in 17. I was very altcoin heavy in my portfolio, and I mean, those altcoins lost like 99% of their value. How would you position yourself in this market going forward, knowing what we just talked about, a potential move down, a new head and shoulders pattern. How would you position yourself as a crypto investor?
So I think the number one thing is know what you're investing in, right? Don't invest just because everyone's telling you to do it. If you're going to choose cryptocurrencies to be involved with, make sure there's a use case there. There's something unique about them that makes them special. Those in the next wipeout are probably the ones that will survive, that have that edge. And again, Bitcoin and Ether probably do survive. Especially Bitcoin now being viewed by the corporations as kind of a store of safety, that will survive. Doesn't mean it's not going to drop, but I think if you're going into something of a crypto winter, potentially, you want to make sure that you're not in ones that are going to be zero and never come back. So think about that. Think really, just like investing in a stock, there should be a reason behind it, not just because it's the hot thing or everyone's telling you to do it. Have a thesis and stick to it.
I'm a crypto channel, but I tell people to diversify out of crypto as well. Like, you can't be all in crypto. You diversify your portfolio within your crypto bag, but you got to have some stocks. You got to have some real estate. You got to have a number of things, right, Gareth? You can't just be all crypto.
Yeah, and that's what I do. I mean, again, it's diversifying. I have gold holdings, I have some silver, I have crypto, I have stocks, and the beautiful thing about it is you can oftentimes be protected in some assets will go down, but then others may go up, and that'll kind of make your portfolio more stable to keep you from feeling the pain of big drops. And remember, whether you're investing in stocks or cryptocurrencies, when everyone is screaming about something, that's usually the time to go the opposite direction. So when everyone's hating on something, it's usually the time to buy. So remember that contrarian view. That'll serve you well, absolutely.
There you have it, ladies and gentlemen. Again, thanks, Gareth, for coming on. This was a great Kicking It session, guys. Make sure you like, share, and subscribe. And also, get over to his website. That is verifiedinvestingcrypto.com. Hit him up. You got questions. You can also catch him on Twitter, and that is Gareth Soloway. On Twitter. So check him out. He's always tweeting over there. 52,000 followers. He's doing his thing. I'll definitely have to have him back on, ladies and gentlemen. Thank you again for tuning in for another Kicking It session. Make sure you guys like, share, and subscribe, and click that bell to receive more interviews like this. I'm out of here, people. Holla!